Hello, 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 hello. Mic test. Mic test, mic test. Hello, 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 hello. So it looked like the audio is working fine. So guys, welcome to the 13th iteration of the Trading Opportunities webinar. This is Nirav. And I hope you guys are able to watch this webinar as well as hear my audio clearly. If you are there online, I would appreciate if you can just clarify that or confirm that in the comment section. Right. So while you guys do that, let me get done with the legalities. So before we move any further, here is a disclaimer on screen suggesting all content presented here is purely for educational purposes. I'm not soliciting any buy or sell. If you do go on to use these views for your trading, investing, or for any other purpose, you yourselves will be liable for your profit, your loss, and your loss of profit or anything else that might pursue. Rest of it you can just read from the screen itself. So with that out of the way, let me give you a quick introduction. So guys, my name is Nirav Yadav and I'm the admin and founder of 50eyes.com website, where I present my market views, and I have been doing it for 7+ years. My area of expertise is Elliott Wave, and I cover literally all the major markets, including Forex, commodities, cryptos, as well as indices and stocks. So my views have been presented here. You can see the current webinar series which we are doing is called Trading Opportunities, and we have done 12 webinars in this series already. If you visit my website and scroll down, you can just check all these webinars for yourselves. So currently we are doing this 13th webinar, and for those of you who are new, we do these webinars on Monday, Wednesday, and Friday of each week at 2 p.m. GMT. Right, so best you guys join us live, because there are sometimes trades that once I discuss them, they just play out within the next session itself. So it is not much use if you are joining in or not joining and watching the recording. Right. So with that quick outlook of what these webinars are, I like to point out a few more things about my work. Secondly, this webinar is also broadcasted live on YouTube alongside TradingView, so you can watch it on any of these platforms. Right. 1 second, guys. Let me open up incognito here and check if the stream is going fine. Good evening, Madhavji. Finally, a comment. So, guys, as I was saying, that these webinars are conducted on Monday, Wednesday, and Friday of each week, right? And this is the 13th one we are doing right now. Right. Further on, I wanted to give you a quick outlook of the rest of the work I do. So this is the YouTube channel where I've been doing my analysis for many years and publishing videos, live streams, and whatnot. I'm also the author of the book called Things with the Markets. It is available as an ebook on Amazon's Kindle platform, so you can just get it instantly, right? If you are interested in learning more about my work and how I do my analysis. Right. And lastly, I just want to show off this forecast accuracy, because for these 6 years, I have been keeping a track record of every of the analysis that I do on YouTube. So you can see the instrument name, etc., over here. And the accuracy calculated was for 2016, 83.34, 2017, 87.50, 2018, 84.61, 2019, 84.88, 2020 is 88.52, and 2021, 82.22. You can, as always, just scroll in this spreadsheet. This is a Google sheet, by the way. Check the date, check the name of the instruments: crude, gold, S&P, Nifty, Axis Bank, Amazon, etc., etc. check what the analysis was and the video itself to verify what we said, had it worked, had it not. Also, the results are posted here. So I'm just showing it off to let you know that I'm a master of what I do, which is Elliott Wave and advanced price action. And this accuracy is a proof of it, because in this industry, even an accuracy of 60% plus is considered exceptionally high. And here I have near 90% accuracy for 6+ years. Right. So with that out of the way, let's now head over to the webinar. So the webinar will be conducted with the charts of Euro USD, followed by EURCAD, USDJPY, EURJPY, Crude Oil, Gold, S&P 500, Nifty 50, and Bitcoin. So the way I will proceed is I'll discuss each chart, my view on it, and what I think is the current trade setup, and what we discussed in the last webinar also will be covered. Right. So that's the way we'll proceed. If you guys have any doubts after the discussion is done on the chart, you can post them in the comment section, and I'll make sure to check that and answer you guys on it. Right. So that's about it for the way we will proceed with the webinar. Let's now head over and start with our first chart, which is the chart of Euro USD. So in this chart of Euro USD, as you guys may remember last time and last to last time, for many webinars, we were tracking this leg up. We had analyzed and forecasted that there will be a movement in the upward direction. Right. In the last to last webinar, which was the Monday webinar, the trade was triggered. And in the Wednesday webinar, I told you guys that if you are long, just hold with your trailing stops and whatnot. And these were the suggested targets. I'm not sure if I drew the targets in the webinar or after the webinar when I was analyzing it myself. So, but anyways, these are the targets: 1.06956, and the next one is 1.08074. So as you can see, the first target has already been achieved, and the market seems to have shown some sort of weakness here. There is no clear sign of sell-off here yet on this counter, so I do not want to say that close out all, but strategically we should exit at least 30 to 50% of the long positions here. So the view on Euro USD basically currently is that if you are long, take strategic exits from it while trailing your stop loss. And let's leave the view for the trading, and let's now check the analysis again. Hello, MF Darwal. How are you doing, man? So let's check Euro USD. So first of all, from this point of reference, which is the price level around 0.95373, and the date is 28 September 2022, we seem to be having what we call a WXYXZ triple zigzag correction in Elliott Wave Technologies. And do not worry if you don't know what WXYXZ or triple zigzag is. I'll just explain everything in very simplistic manner. So if you follow me along with this orange drawing that I'm doing on the right hand side, right? So I'll just be quick, because if you are following me for the past few webinars, you would have seen me draw this thing multiple times. So this first leg up is called a W, second leg up is called a Y, and the last leg up is called a Z. All three are connected by waves which are called X waves, or the connecting waves, right? So in this case, this is the W, this is the Y, and this is the Z in progression. This is your connecting wave X, and the second connecting wave X is here, and there is one more what do you call possibility here, but let's not get into too much detail here at this point in time, right? So the thing is that this last leg Z should have three waves. As you can see, this leg up, and then a small correction down, and then another leg up. So in this case, this leg can be considered as the leg up, or the wave A. This leg can be considered as the triangle, and hence the wave B, dot B. And the last leg up, which we call dot C, can also be considered complete. So that's why I was saying strategically we should plan to take at least partial profits from this longs if we are long, if you guys are long, basically. So nothing really changed here. The analysis, as I said, has been playing out for the last 2-3 weeks on Euro USD, precisely as we talked. And if there are any comments, you can just type them in the comment section. Also, if you were able to catch this trade, and if you are following me from the last few webinars, you should be, because we have discussed this in very much detail, then kindly post it in the comment section. It would be nice for other people to know, right? So That's my take on Euro USD. I'll wait for a few seconds before we move on to the chart of EURCAD. Also, guys, if you are able to understand what I'm saying, it will be nice if you can just type in clear or understood or something to confirm that you have. Okay, thank you, Darrells. Thank you for the confirmation. Let's move ahead with the chart of EURCAD. I think I'll just leave this chart. It is, I mean, it just consumes so much time, and the analysis has not changed for quite some time, and it has not even given a trade yet. So, who's in EURCAD, we have a zigzag correction is what would look like from the current outlook on this chart, right? And in this zigzag correction, we are currently in wave C, and I'll just quickly draw the internals and then explain what I am really talking about, what is a zigzag correction, and what are we seeing here. So in Elliott wave terminologies, a leg which goes up in 3 waves would be called a zigzag correction. First leg will be called an A up, B down, and then C up. And the interesting thing, or the point which we are interested in, is that the C wave, if you magnify and check the internals, will have 5 waves inside of it. Those 5 waves are called 1, 2, 3, 4, and 5, which is exactly what you see I have drawn over here. 1, 2, 3, 4, and 5. Right. So with that in mind, it looks like it's currently progressing in the 5th wave. Right. And the setup which has been the same for quite some time on this counter is that once this market breaks this green channel to the downside, because once this C wave is complete, then the market should go down at least a little bit. So once the C wave is complete, we expect this market to break this green channel, and that will be our trigger for sell off or for trigger for possible shorting in this market. So that's about it. EuroCAD. I don't have anything else to add other than this internal count update. Let's move ahead with the next chart. I don't think there will be any doubt on this one. Radu Adrian, great job, flawless reception. Thank you, Radu and Ramasuba Reddy. Reddy, I'm not covering stocks in these webinars, but we will be looking at Nifty near the end. Right. So, anyways, let's head over to USDJPY. But yeah, guys, there's one thing I wanted to point out. USDJPY. One thing I wanted to point out is that I was thinking of doing a separate project for Nifty and Bank Nifty and NSE stocks. So, but I'm just trying to get some contacts in, some people who can confirm that they will be having a chain of sharing, like they have some groups where they can share the content, and we have some, audience coming in for that. So that's why I'm holding it. So if you guys who are viewing right now have some contacts like that and would like to see me cover Nifty, Bank Nifty, and NSE stocks in much more detail on a much regular basis, then you should hit me up via my website contact us page, or yeah, just email me and we can then arrange a call or a meeting or whatever, right? So just because we're talking about it, my website is 50eyes.com and the contact us page is at the top right. Here it is. And the contact us page is 50eyes.com/contact-us. Right. So you can just fill the form which will come here. Yeah, this one, and I will get back. So that's about it. Seeing that are now available for trading. Okay, that's it. So that's about it. Now let's head over to our chart of USDJPY, and USDJPY. We had what do you call? We had an update in the last webinar. There was some other outlooks I was discussing. Let me first quickly check which chart I'm following. Yeah, there it is. So this and this both can do. This one. Okay. So USDJPY, after this strong leg down, this one, 1 second. Yeah. So after this strong leg down, I had one update here, and the update was this basically that we are still looking for longs, but we cannot say that with extreme confidence because of this huge leg down. And we had then placed an alert over here at 133.97, which was basically an alert which would, once triggered, would make me look into the selling opportunities for this counter or instrument or whatever you would like to say. So anywho's, the alert never got triggered, and the market seems to have gone back in the upside or the upward territory. So that means our past count is holding up, and that means we need to relook at it. And if you are following me for the past webinars, again, you already know what our past count is like. So a little update, I'll just quickly do it over here. I'll just do it with text. So what we are expecting here is that a minimum of a zigzag movement we are expecting in the upward direction on this counter, right? And in the zigzag movement, as I just mentioned in the what you called B or two, in the zigzag movement, as I just discussed in the last chart, we will have three waves, which is called first wave is up, second wave is down, and the next wave is again up. Now in this progression, it looks like the B wave is complete. So technically this can be taken as your stop loss, although the proper stop or the exact stop will always be near the 99.9 or basically the extreme low of the movement, which is this point, right? But as such, in trading perspective, we don't want to go that much lower, and this can be considered as our current level where this market has started the reversal in the upward direction and completed the B wave. So we can say that this is our B wave completion point here, and after that we possibly are going into the next leg up. And if you guys did miss my last count, which was an ABC up count, then I'll just like to remind you guys that the count we are following will look something like this in Elliott wave terminologies, and the C wave should head higher, taking out the high of wave A, taking out the high of wave A. So technically it has done that. So in the most bearish scenarios, this can be considered as a completion, but I do not think that is the case. And I personally think that this market is still going to go higher up. So in my understanding, this lag, at least one lag is remaining here, as I've just pushed here the counts, right? So I think this wave 5 is still remaining minimum, right? Of course, it is possible that it will have a multi-legged upward movement and whatnot. So let me just quickly check that on a lower time frame if this count is fitting in perfectly here or not. 2 and 2, 3, 4, 5, 4, 3 and 1, 2. So it looks like the 3 is still continuing, and we can draw the internals here now. Actually, that both of these are possible counts. So let me just finish it up and then I'll tell you what I'm doing. Okay, so guys, as you can see over here on screen, I have some updation of counts, and this is a 15-minute chart. So what I think is that the C wave is possibly continuing here, right? And if the C wave is continuing, it is continuing from this point of reference, which is this white box which I just drew. From this point of reference, we seem to be having a wave 1 up, a wave 2 down, right? And it looks like we may still be inside the wave 3 here, right? So because this wave 1 up is a circled one, is a circled one, and a circle 2, and it looks like the circle 3 might be continuing, right? And if the alternate view is that the 3 is already complete here, circle 3 is already complete here. So if it's here, then one leg up is remaining, and if it's complete, then still again one leg up is remaining for the circle 5th, this one, right? So basically the idea is that we are looking for this 5-wave completion, very simplistically speaking, and we expect that one more leg up is remaining on this counter, right? So but I see that this wave 4 is looking a little bit weak, so we will have to consider the counter scenario, that is, if our count is not the right count and this market is doing something else, then how will we know that? So in that particular case, we have the simplistic view that if this market goes, it's already at 38.2, 136.891. So see guys, the thing is that generally this wave 4 which we have on screen will generally stop at the 38.2 level. So thus far it has not violated any of the guidelines. It is exactly at 38.2 level, right? So the problem will start if this market starts to take this level as a resistance instead of a support. That is, if the price closes below it and then tries to retest it and but cannot close above it, that is when we will say that there is something wrong with this count. So that's the point here. You will have to observe it price action wise. One thing you can do is simply put an alert over here lower than this low, right? Add alert, not on the trend line, right? Just an add alert and less than. So if it goes lesser than that, then that's a problem. Otherwise, I would say that we are good and this count is following. And the outcome or the conclusion of this count is that one leg up looks to be remaining. Minimum target is that it should take out the high of 138.16. And we can also evaluate some other targets. Let's quickly check that. You guys following me? Are you able to understand whatever I'm blabbering? How are you guys understanding it? Madhavji on TradingView and Darwals. And what about you, Radu, Ramasubram, Subram Reddy, and Nikosi Kumaro? You guys able to understand this count thus far? Nine minutes ago. Yes, okay. Thank you for the confirmation. They're also on TradingView. Okay, so getting ahead, as I just said, if this count is correct, then it should be up. If it's not, we have the invalidation levels as already placed as triggered, 136.8. Below that, if it starts to close and takes resistance, then that would be a bad news for us. Well, let's see. We all do analysis and we hope it works. Isn't that what we guys do? So anyways, that's the count for now. And yes, I can just push some targets for the wave 5, but oh well, there's not much point in it. Anybody can do that kind of a thing. You can just measure this and then project it from the end of this, and then you will have a so-called target over here. So that's your, one second, what happened here? Okay, there it is. So you can call this as your target here. What is this going on here? I think I clicked something here. Okay, so I'll have to do it again. Okay guys, so I just wanted to draw this 1:1 target and let's make it red, and it is coming around what is this, 138.748. So that's what we think is the possible target, but then again, as I said, price action will be more important on this count. So that's my take on USDJPY. We did discuss it in great detail, and the count has also been updated. So if you guys have any doubts, you can just type it in the comment section. I'll wait for a few seconds before we move on to the next chart, which will be of EURJPY. And again, guys, more participation would be nice. I see some people there are online on YouTube as well as TradingView. I don't think so. I can check. TradingView has an error. It always shows me 0 views and 0 online. So anyways, yeah, one more thing, guys, do keep hitting the like buttons on YouTube and the rocket button on TradingView. That will help the algorithm know that the content was useful. Let's move on to the chart of EURJPY. Which count is the one we are following? Yeah, this is the one we are following. So this will need an update. So in this chart of EURJPY, right, we discussed last time with a small update, right? Let's just quickly check what that update was. So this update was influenced again by the strong down move, which you can see over here, right? And this update basically said that we will have to consider the possibility of a down move because before this down move, we were saying that this is a strong up progression and it should head higher, right? So only after this strong move, I said that we will have to now consider the possibility that maybe this progression is not doing what we thought. So anyways, there was a setup that it can go down, but the confirmation was not there. So my idea was that we consider the upward movement as our main hypothesis or hypothesis one, and we consider this progression as a possible leading diagonal, right? So now let's see what it is doing and what is a leading diagonal really. So a leading diagonal is a five-wave pattern. Let me check one thing here. Yeah. So a leading diagonal is a five-wave pattern again, and in the upward direction, it would look like something like this: three up, three down, three up, three down, and then three up. So there's an overlap always. This is the first leg up, second down, third is up, fourth is down, and fifth is up. There is an overlap on the fourth and first, sorry, and that's what makes it a leading diagonal. So in this particular case, we already have the first over here, right? The second over here looks to be that way, and the third wave is over here, seemingly. Now we don't seem to be having an overlap thus far, right? So if this is going to be leading diagonal, we should see an overlap over here, right? And once this overlap is done, we can then expect this market to do something like this. So EURJPY, right? EURJPY again, we are looking for longs, right? And progression, I just pointed it out, and I'll just draw it on the chart with the counts as well. But the count here, it has some other possibilities which are also quite what you would call solid. So what I would suggest is to pay more emphasis on USDJPY instead of EURJPY this time around because of the clarity in the counts, right? And this is the updated outlook. And this is the updated view with white trend line suggestive of the expected price progression here. So this is how we expect this market to proceed, right? I can just remove it at this point in time. And where is that? So guys, this is the expected progression roughly. Obviously, it's a rough progression. We don't have any confirmation of anything else thus far. So, I mean, obviously, after the overlap is done, we will have to see if it's a contracting diagonal or expanding one. So we leave that to future price action, right? Maybe it's an expanding one, who knows? Then in that case, the overlap will be a little bit deeper, right? So that's my updated view on EURJPY, guys. If you have any doubts, you can post them in the comment section. If you understood it, just type in clear, understood, or something like that. And once I see the confirmation, we'll just head over to the next chart, which will be the chart of crude oil. Okay, looks like everybody is on the same page. So let's head over to the next chart, CL crude oil. So in this chart of crude oil, last time when we discussed, we were discussing this chart from this point of reference, which is around the level of 76.475. And at this point of reference, one second. At this point of reference, the idea was that this market is following a flat kind of a pattern, which I'll draw in the rough area right now. So a flat pattern would look something like this. First of all, let me just clarify what this is. Y and ABC for up and then Z. Okay. So what we have over here is after the wave Y, circle degree, let's say, we are expecting it to do something like this. This will be your connecting wave X and this will be your Z. So this is the rough structure we expect this market to be forming here, right? Now, because this is a rough structure we expect this market to be forming. By the way, let me check if there is any comments in the YouTube live stream. 1 second. Okay. Yeah. So what I was saying was that at this point in time, what I'm expecting is that this market is in this progression, which count I've just posted on screen, right? And let's just compare it with the count which is on the left hand side. So this will be your A, and this is what I'm expecting to be the B. And C, last time when we discussed, we were expecting that the C wave should continue a little bit up, right? But there was no confirmation. I mean, it's wave C. It can continue a little bit up. It can continue way too much up as well. It can even go to this last highs as well, right? So there was no telling what's happening. And even now, it is possible that C is still continuing, right? So that unclarity still remains. So what we are discussing here is that what can we do about this? So first of all, two possibilities. Let's take one thing at a time. Let's consider that if the C is complete already here, then obviously this market should head lower, right? So if this market should head lower, that basically means that we can look for selling opportunities near the last low, which will be around the level of 71.289. So around this level, we can expect that once this level is breached to the downside, we can re-enter shorts or look to re-enter shorts, right? That's, let's say, our hypothesis one, suggestive downward movement. And the trading strategy I just illustrated. Second strategy is that the C is continuing. If the C is continuing, then again, it should be continuing as 5 waves in the upward direction. So if it is continuing as 5 waves in the upward direction, then it should break it to the upside and then break it to the upside again. So 2 times it will take out the highs. So in that case, again, we can simply move our upside trigger near the last high, right? So particularly, I will not be interested too much in getting long on this market because the overall trend is suggesting that one leg down is remaining. So basically, I'm more interested in selling this market short than long. So for me, the less than alert is much more important. So these are the two views, right? Hypothesis one is straight down. Hypothesis two is suggesting first upward movement and then down. A very clear analysis, and this is definitely one to be kept in your watch list. That's for sure, right, guys? So that's the take on crude oil. Okay. So if you have any comments, you can just type them in the comment section. I'll wait a bit here, right? And before we move on to the chart of gold, let me check if we are getting what is called this public recognition, that is likes and shares, which I just asked you guys by refreshing the tab. So again, guys, I'm requesting for those of you who have joined in later on, please hit the like button on YouTube if you are finding this content of use, and hit the rocket button on TradingView. That way more people will know that the content was useful to you traders. Okay, so that was my take on crude oil. Let's now head over to the chart of XAU USD, or gold basically, which by the way is following our counts really well, and we had a trade on it just in the last webinar as well, which played out precisely as expected. So let me see which chart is the one being followed. I think this is the one. Yeah, this will do. So now, as you can see over here on screen, the chart of gold. Let me just give you a quick rundown of what our analysis has been so far. So from this point of reference, around, thank you for the confirmation, Darwals. And from this point of reference, around 16:15 on the date of 28 September 2022, what we have assumed is that we have a possibility of an A up and then a B down and then a C up. So in the last webinar, I was discussing that we were able to catch this leg up, and we were able to catch it like since Monday or before Monday. I was telling you about this, and we discussed in great detail how we were able to catch it. So now let's strategize based on the new price information, what extra things we can do here. So now the new thing is that if the C is complete here, then this market can just do this, go and make a new low, right? So we cannot reach to that judgment right now, and I particularly am not interested in holding this long time frame kind of a trade without such low confirmation. So that's the first thing that can happen. Second thing that can happen is that this lag is still continuing in the C wave, and that would mean that the last high should be taken out. For that, I have an alert placed in 1807. So basically, this is pretty much of a situation where we look for certain levels on the upside above 18. Actually, I'll just adjust it to that pivot. So above 1810, let's say I will be interested in reanalyzing this chart and looking for possible long opportunities, right? Because of the suggested C wave continuation to the upside, right? And for the downside, we don't have any confirmation yet. It can move a little bit lower or it can go a lot lower. For instance, let me show you what I mean. So it can go like this, or it can go like this. So that's why I'm saying for downside, we do not have any confirmation. So we'll play it as we can right now. And as price action gives us more information, we might be able to do a little bit more detailed analysis and see how things go. So that's our take on gold, right? Wait and watch for now with the upside setup already discussed. Next chart will be the chart of S&P 500. Very interesting. It is precisely following our counts that we discussed in the last webinar. And if you have any doubts, you can just post them in the comment section while I load up the chart of S&P 500. This is the one. This is the one. This is the one. So that's it. We have on screen the chart of S&P's 500. Let me see if there is any comments, by the way, on any of the social media. Okay. So on this chart of S&P's 500, last time if you guys were with me live, you remember I said precisely that if this count is holding up, by the way, let me explain the count. This is picture perfect playing out. So anyways, when we met last time, I said very clearly that I am assuming this to be a triangle. So this will be the first wave of the triangle called the A wave, the B wave, the C wave, the D wave, and E wave. So as you can see, in that sense, the D wave is supposed to go down. And even after the E wave, we will then see a fall on this market. That's what this count is suggesting. Right. So with that in mind, in the last webinar, I said that once this market takes out this channel line, right, and I had drawn an alert here, somewhere here. So either you take the channel, which is the conservative approach, a little bit aggressive approach, or you take the level. In this case, both of them are the same, not much of a difference. But anywho, the idea was that once this trend line was taken out, then we want to see sell-off in this market, right? Intraday wise, we can look for sell-off till the next support region, right? And swing wise, as I just mentioned, even after it goes up for the wave E, it will still fall. So in this case, it was a sell only kind of a trade setup, and this is exactly how it has played out so far. It is seeing sell off. So now what I think is that it can see some pullback and then fall for the wave D, because I do not think the D wave is complete. Keep in mind the triangle's wave D will or should be a zigzag, not will. It can become more complex, but in this case it may become a zigzag, a simple one. So in that case, one leg down is still remaining. After that, we expect the market to move something like this and then again down, making a low lower than the last low or the low of this wave B. So that's my take on S&P 500. Pretty much picture perfect so far. And if you are short, adjust your positions and stop losses accordingly as per the projection we have right here on screen. If you are not short, then keep that in your track list. It will definitely give us more opportunities. And that's about it from my end on S&P. And yeah, also guys, if you are following the last few webinars and you were able to catch this sell-off, because I pointed it out literally in the last webinar, do let me know in the comment sections. What's happening with YouTube? Is the stream not going live? It shows chat top 8 people. Very less participation. I had hoped that today being Friday, there will be more people joining in. But oh well. So guys, I'll move on to the next chart of Nifty 50 now. Right. And after that, we will have a look at Bitcoin, BTC. So let's load that up. So this is the chart of Nifty 50 on screen. So if you are following me for the last webinar or any more of these webinars, you remember that we were able to spot this leg down. And then here I suggested this leg up, and this move we were able to catch it completely. I already predicted this leg up somewhere here or here. I will have to check the exact webinar date. But anyways, I personally was able to catch this leg up, right? And after that, in the last webinar which we did on Wednesday, I very clearly mentioned that if this market has to go up, I think the webinar Wednesday. Let me check the date so that I can make more clear statements. So the last webinar was on 14th December, right? So 14th December. So the market closed somewhere here. Let's see. Yeah, so the market had closed somewhere here. Okay, so now we can just discuss things in more detail, and I seem to have catch on Dow. I think that it is a similar structure. Yes, there was generally Dow Jones and S&P will form, not always, generally they will form very similar structures. And you can also have a look at Nasdaq's 100. It also seems to have a very good correlation. Time to time they will give you trend setups. And generally the way I use them is that if one of them is not clear, then I'll check the other one, and if the other one is not clear, I'll check the third one. And generally one of the three will have a clearer structure. So in trading, you can go that way. But these days, because I'm covering a lot of markets, I tend to focus just on S&P for these public webinars. Okay, guys, coming back to the chart of Nifty 50. What I have over here on screen is that I'm just discussing what I was saying in the last webinar. So in the last webinar, I said very clearly that if this market has to go up, it should go up first before taking out this low. This low. 18640. So I said it very clear words that if it does not take out this low and heads higher, then I'll be interested in longs. If it does not do that, then I'm not interested in longs. So anyways, what really happened, it just as you can already see, it went down and down and down. And I waited a little bit, but in the morning session for first 15 to 20 minutes, which I generally tend to do from time to time for more clarity. And I realized that this price action is suggestive of shorts, so I entered some shorts, and it just kept going lower. I basically was just on the screen. I was just waiting that if it gives a spike up, I'll just exit with market orders. So basically, you can see I didn't have even the need to trail the stops. It just went lower, and every bar just went lower and lower and lower and lower. So there was no clear pullback. So on the expiry day, I was able to catch some big shorts, like literally very, very huge profits I was able to make. And today also I was able to catch this leg down and also make some good profits today as well, right? So now let's talk about the counts on screen. And yeah, by the way, guys, this is why I keep saying to you that you gotta follow these webinars when they are happening live, right? So if you were in the last webinar, you would have gotten the context of how things are happening, and you would have been able to what do you call catch this move. So that's it, guys. Follow them live for the optimal experience. So we'll have a look at USDJPY later on. First, let's cover this chart up. So what I think might be happening of one of the many possibilities that this might be a W and this might be an X and this might be heading down for the Y. And within this Y, we might be having what you call diagonal for the A, up for the B, and this might be the C down. So what did I just say here? Let me just draw in the comment section. Not the comment section. What am I even saying? Draw it in the rough area here. So what I'm saying here is that this is the first leg down, connecting wave X, and it should again be followed by another leg down, which should have three waves inside it. The first wave will be called an A. Next leg up is a B wave. And the last leg is called a C wave, which will complete the Y. So in this progression, what I have is some very nuanced analysis here. So it is basically, long story short, suggesting that what is it for 543? So it is suggesting that if this is the count being followed, then the C wave is already there, that it has already made the C leg down. So maybe the C wave can continue a little bit lower. That's obviously always a possibility. And but as such, the safe movement or the movement to catch the trades is already kind of gone here, right? I was thinking of adding some shorts, but I'll just add them on Monday if I feel like it. So the analysis basically comes out that if there is a C wave, then it's possibly either complete or it may have some more downside remaining, but we cannot trade that, right? Second thing is that the X might become complex, go sideways. So that possibility suggests that this market can also show you something like this, right? So basically at this point, a lot of possibilities are popping up, and some of them are suggesting that this market can become ranged within this zone. For that reason, I'm going to wait and watch how this progresses, right? And as for the bare minimum movement, the bare minimum downside movement seems to have already completed at the WXY. However, I personally think that this market should go lower than 18,200 a little bit. At least it should test this 18,200 level based on my price action and Elliott wave analysis, right? So that's why on Monday I will see how this price action performs for this range, and if I find some sort of continuation pattern like a triangle or something, then I will look to add some more shorts. But for now, it's a wait and watch counter, and the updated count is here on screen with you like this, right? And for downside 18,200 is what I'm expecting. That's it for Nifty, guys. Last chart we will have a look at is Bitcoin. If you guys have any comments on Nifty, you can just post them in the comment section. If you are clear on it, typing in clear would be appreciated. Let me do one quick thing and see how the stream is going on YouTube before we move on to the chart of BTC. And yeah, guys, also if you guys are watching this later on as a recording, or if you are new and have just joined the webinar, then definitely hit the like button on YouTube and the rocket button on TradingView. And another point to note here is that we are conducting these webinars every week, Monday, Wednesday, and Fridays at 2 p.m. GMT. So make sure you join in and take the most benefit out of these. Right now, let's have a look at where is that? So that's next chart. Okay, so Bitcoin again, it looks like it is now possibly going down for the wave C. I'll give you a quick context. What we are expecting in Bitcoin is that we have a A here and we are expecting a flat correction here. This is the most or the least aggressive count, sorry. So this is the least aggressive count we have for the downward movement. The other counts are all suggesting straight fall here, right? So anyways, the market is currently falling. So I am interested in actually checking out what it is doing on a lower time frame. Let's say 1 hour should do. Let's see what's going on over here. So it's a congestion pattern without going into extreme details. From this point of reference, what I see here is okay. So it may have completed here. So guys, that's the first possibility, is that this was a up, B down, and C up. So the C up completed around 18,361. So if 18,361 level C completion is over, then this leg down can take or should take the market lower, right? Second possibility is that this is just the first leg of a continued complex correction, which would simply suggest that this ABC, let me draw it a little bit. Yeah, this ABC will be seeing another X wave, and then the next wave will see another ABC in the upward direction. So both of these possibilities exist, but as such, I can confirm that a very clear looking ABC structure seems to have completed here. So this market is open for downside. We cannot deny that. It has been open for downside for quite some time, but completion of a possible structure adds some more weight to it. But yeah, keep in mind the another leg up possibility is still not relegated. So yeah, not much point here doing short-term analysis here. I think most of the people who are tracking this are only interested in buying it anyways, right? So, and if you are trading, then why are you just bothered with Bitcoin? There are 100 different things you can trade. So that was my take on BTC. Again, if you have any doubts, guys, post them in the comment section. And with this chart, we have also discussed all the major charts which we discuss in these webinars, which are Euro USD, EURCAD, USDJPY, EURJPY, CL, Gold, S&P, NIFTY, and BTC. And before I end this webinar, I like to take a quick inventory of the things we have done. So first of all, we have caught this week itself, we have caught the up leg in Euro USD, right? Euro USD, we have caught the up leg within this week. I'm just talking about the things we have achieved within this week publicly. Up leg. So I'll just draw an arrow here. And EURCAD has just been an analysis, which never really played out to anything. USDJPY, we have a clean setup here. So just keep that in your watch list. EURJPY, again a setup to keep in your watch list, but USDJPY was much clearer. CL, we have a good setup. Again, keep that in your watch list. Gold this week, we were able to catch the up move very beforehand, or very, what do you call, foresightedness we had in gold. So it was a good trade. S&P, yes, we were able to catch the current leg down. I just mentioned that leg down in the last webinar itself. Nifty 50, we were able to catch the up move earlier in the week, and the down move I was able to catch today. So Nifty also. So as you can see over here, 1, 2, 3, 4 out of 6, 7 things that we discuss generally have given us very clear trades. So I'm just trying to show you the potential. And these kind of webinars, guys, are generally done paid. And if you are seeing it here, it's done for free completely and completely publicly. So that's why I keep saying to you guys, join in, right? And take the most benefit out of these. And one request at the very end from my self is that please share these webinars with at least 3 of your contacts. If you have a Discord channel, if you have a Telegram channel of traders or something other, please share it. If you are on Twitter, Facebook, just share it. Share the links after this webinar is complete, and tag me along. My Twitter handle is at the rate of 50 eyes, right? So that will increase my visibility, and that's the whole point of doing these webinars, is to increase my visibility and increase the number of people I can reach, right? And lastly, again, if you guys are interested in learning further, then I have Elliott Wave video course, personalized training classes called Training Program LT. You can send inquiry forms for it. And my book is available on Amazon Kindle, as I have mentioned earlier. It is an instant access ebook, so you can check that out as well. That was it from my end. I hope you found the content useful, and I'll see you guys next